Welcome back to my channel. In this video, I'm going to be covering Citigroup. This is one of the big banks in the country. And in 2023, banks have been really heavily discounted. If you recall, earlier in the year, there was a big bank scare. There was a run on a couple of banks, and a couple of banks went bankrupt. Now, this bank continued to go on. They got heavily discounted, and I started buying shares into Citigroup. They pay a high dividend, and I thought they were undervalued. They just announced their earnings today, this morning, as a matter of fact, and I have some fresh data to analyze and then make a decision whether I should keep buying shares in Citigroup, hold, or sell my shares based on the information I got from their earnings report. Before I jump into the analysis, do me a favor and like my video and subscribe to my channel. I'd appreciate that. Please provide comments on Citigroup and on the video as well. Now let's get into some analysis of Citigroup. Citigroup is a diversified big bank. It offers up personal banking, wealth management, and it also offers investment banking. It offers up market trading. So if you wanted to buy fixed income or equities, you can buy that through Citigroup, and also services for businesses like treasury and so forth. So it's a big national bank. It's actually an international bank. It's a big bank in places like Mexico. So it's a very big bank, pretty much like JPMorgan or Bank of America. Something that's interesting is that banks, a few of them had their earnings today and they were all favorable. JPMorgan had favorable earnings, Wells Fargo had good earnings, and Citigroup had good earnings. All three went up in value in early trading. So it goes to show that the banking industry is doing well. All the scares around, Silicon Valley Bank going bankrupt earlier in the year, they're just fear, in my opinion. And I think the banks have a lot of profit going on. And I think they're going to reward stockholders with big dividends, and their stock prices should begin to appreciate. Looking at their earnings, what I liked about their earnings was that revenues are growing 9% year over year, which is very good. So that's very good to see the top line is growing. Also, they're profitable, and their profit is also growing. They had earnings per share of $1.63, which is 30 cents higher than what the street was expecting. It's also 23% more quarter over quarter. Citi also provided guidance for the whole year, and that's one quarter remaining. They expect they're going to end up between $78 and $79 billion in revenue for the whole year. And looking at the low point and comparing to 2022, that would be about a 5% revenue increase for the year. So I'll take that. This is a big bank, so 5% is good growth. They're also guiding for good earnings per share. And I'm going to take the forward 4 quarters of earnings per share in my valuation. A metric that I really want to track with a bank is the tangible book value per share. I like to see it grow year over year, showing that the bank continues to accumulate value for shareholders. And their book value has really grown nicely. If you look at the growth in book value from the third quarter of 22 up to the third quarter of 2023, it looks like it's about an 8 to 9% improvement or increase in book value. I think that Citigroup is actually worth about $60.12 per share, but the stock market will sell shares at about $41 per share, so offering up an attractive 45% upside. And I use really 3 to 4 methods, depending how you count, to value this company. I use the book value method, the earnings method, and the earnings per share method to value the company. And then I take a blend of all three to get to the 45% discount on this company. I would say that my data for these two models down here, I actually take annual rates. And I would say that my estimates are pretty conservative compared to where they're operating today. I think there's a lot of upside in those numbers, but I'll be conservative and just update. Really what I updated was earnings per share. The first 4 quarters that we have ahead of us, those are the best estimates we have. I'll use a PE of 12, and that gets me to an earnings per share value of $51.56. You can buy shares at $41. So it offers up about a 24% discount using the earnings per share value method. And keep in mind, it pays a nice dividend of about 5%. Looking at the stock price over the last couple of years, the stock price was riding high, reaching about $80 per share. Looks like in 2021, but since then it's really had this decline. I think part of the decline this year has been the scare in banks. I would definitely think that's the case, but overall it's been on a decline for about 2 years. I think there's value between where I think the company is worth and the current stock price. And this is a big bank. They operate profitably. They're growing their book value. They just have a lot of good variables involved. So I value the company at $60 per share, and the company you can buy shares at $41. So on the surface, it looks like an attractive investment. The company pays a 5.1% dividend, and year to date, it's down about 9%. So it has had a nice rise as of late. And I think through the remainder of this year, I think stocks have really come down in the months of August and September. And they're set to rally because they've been beaten up so much, especially banks. I like to follow a process when I invest in companies. For banks, I have 4 key questions followed by a decision whether I want to buy, hold, or sell my shares. And the first question is, do I want to own this bank? Do I like the banking industry? And the answer is yes. I think Citi offers the best value proposition of the big banks. I was an owner of JPMorgan stock for a long time. I did well with it, but I thought this stock here had just a more attractive value proposition for a big bank. And I like the financial industry. Let's face it, they're not going to go anywhere and they consistently make money. The bank is operated very well. I really like what the CEO is doing. I think they have a very good strategy. They're really performing well when it comes to profitability. They're growing their book value, which is very good. They offer an attractive discount. So I'm going to keep buying shares in Citigroup. So the big scares in banking of earlier this year have really discounted banks, and I think it's an attractive investment. I'm willing to buy good investments when nobody likes them because once people realize that, hey, Citigroup is a very profitable bank and they pay a great dividend and they just keep increasing their book value, I'll be the beneficiary of seeing those shares rise in value. In the meantime, they'll pay me a really nice dividend. So I like this investment and I'm glad that I made it, and I'll be buying more shares of Citigroup. Thanks for watching my video. Do me a favor and like my video and subscribe to my channel. Also provide comments on Citigroup as well as on the video. Good luck investing in 2023.